Have access to a 401k or traditional pension in your job? Consider yourself to be lucky. Nearly 57 million Americans work for an employer that does not offer a retirement savings plan.
Hey guys, and welcome back to The Domino Effect, where we talk about everything business, financial literacy, smart strategy, and how you're going to increase your chances of getting funded. We're talking about how to turn today's decisions into tomorrow's wealth. Maybe you're in your 40s, you're working hard, you got a family, you're building a business. But here's the question. Are you actually even ready for your retirement? Have you even thought about it? Because most people think they are. If you're like me, you probably even put it off for a really, really long time. But guys, the numbers don't lie. And I'm about to show you the biggest retirement mistake that people in their 40s are making right now and probably not even knowing it, or subconsciously knowing it and don't really want to face it. And yes, I'm talking about your 401k, your IRA, Social Security, inflation, and even IULs, which are indexed universal life and annuities. I'm talking about how you can actually retire tax-free. So make sure you stay locked in today. Watch this video till the end and grab your free guide. And don't forget to hit that like button so I can continue to make more free courses and trainings just like this one. Now let's get into it.
A walk with Rosie and Logan is a rare break for Marianne O'Connor.
The puppies.
Then she's back on her laptop, juggling 2 jobs. Sometimes up to 11 hours a day.
What did you think you'd be doing at 66?
Oh, I would hope to be retired.
And what are you doing at 66?
I'm working my butt off.
No savings, no 401k, not even enough to cover an emergency. She sold her home and with 2 other women bought a smaller one, living together to save money.
Now, the first mistake is thinking your 401k is going to be enough. So let's talk about the elephant in the room. Your 401k is tax deferred, it's tied to the stock market, and it's full of fees. Not to mention penalties if you want to pull it out before the required age. People in their 40s think, I'm good, I'm just going to contribute as much. My company, my employer is matching, so I'm just going to continue to go over. But you don't necessarily have to do it that way. Guys, that can just be the floor. That doesn't have to be your full plan. Remember, taxes are rising and they're not going to go down anytime soon. The market is volatile. It's always volatile. It's always going up and down. So rather than relying solely on volatile up and down risky stocks, then why don't you put your money into something that's actually not going to drop below zero, but only allow you to build more money into your account. What you're doing now is diversifying your retirement strategy, which means some of your money is protected and it's growing tax-free and you can access it and use it for your retirement. Not to mention, if something crazy happens, a lot of your money is not going to be wiped out if there is another recession. That's why I teach people how to offset their income with an IUL. So if you need more help with that, you can reach out to one of our advisors. And if you're thinking, wait, I didn't even know that that was an option, hit that button and drop a comment with Retire Smart if you want more videos like this, because we're just getting started.
She sold her home and with 2 other women bought a smaller one, living together to save money.
Thank you very much.
How has that been?
Well, it's been a matter of life and death.
Roughly half of all Americans ages 55 to 66 have nothing saved for retirement.
Spicy, yeah.
O'Connor knew she'd be in that group, adopting and raising 3 children as a single mom.
I have a live for now philosophy, I guess.
How's that serving you now?
Oh, it's horrible.
Mistake number 2 is not accounting for inflation. $1 today is not going to be worth $1 in 20 years, my friend. Inflation is going to be eating up your buying power. And most retirement accounts, they just can't keep up. If you're in your 40s, you need to plan like everything's going to cost you double, because it probably will. And I'm talking about rent, healthcare, groceries, all of these costs are going to be rising. You know now, even eggs are rising. And not to mention, people aren't even accounting for taxes in their retirement. Don't forget that the IRS is not like, okay, you retired, enjoy your life. They're going to come after their portion. If you've got your money, all of your money in pre-tax accounts, you're going to be giving it all away when the time comes when you want to withdraw it, or if you want to withdraw it early. That's why it's important that you know how to offset your retirement by diversifying into these different avenues. So make sure you have a retirement income stream that will adjust with inflation and not one that's going to lock you in. Mistake number 3 is relying entirely on your Social Security. If your retirement plan is, hey, I've got Social Security, I'm good, then I'm so glad that you're here because we need to talk. Let's keep it real, guys. Social Security alone is not enough. And have you been watching the news? Right now, the average monthly benefit for Social Security is around $1,800. Can you live on that? Can you pay your rent? Can you pay your food? Can you pay for your insurance, your medical bills, or if any emergencies come up? Remember, gas, groceries, healthcare, it's all gone up and it's going to keep rising. So if your plan is not outpacing inflation, you're gonna fall behind. Social Security is not guaranteed. And even if it is, it's barely enough to cover everything that you need in most cities. And with the fund projected to be strained as we move forward, there's no guarantee what's gonna happen. That's why it's crucial that you have a backup, especially one that's not tied to government programs, so you're not totally reliant on the system. And that's where life insurance like IULs can come in. You need multiple streams of tax-free income so you can live comfortably, because retirement is not about just sitting around. It's so that you can actually enjoy the time that you have left. Mistake number 4 is not actually even understanding what an IUL is or what it can do for you. An IUL is an indexed universal life insurance policy. It's a retirement tool that grows tax deferred, gives you tax-free income that you can take out later. Your cash is protected when the market drops or dips. You can access the money without any penalties, and you can use the living benefits in case you get ill, you possibly get sick. So think of this like your personal pension, but smarter, more flexible, and completely under your control. And unlike your 401k, you won't get taxed to death. Mistake number 5 is not actually knowing your retirement number. How much are you gonna need to live comfortably? Are you splitting expenses? Are you married? Are you guys both contributing 50-50? What happens when your partner passes away? You know the mortgage payments will not stop. Most people, unfortunately, have no clue how much they need to retire. It's not just about having $1 million. Oh, I need this, I need that. It's about actually having what you need to survive comfortably and what that lifestyle looks like. Ask yourself, do you have enough to make that happen? Mistake number 6 is you've got all of your eggs in one basket. Let me tell you a quick story. One of my clients worked for a company for 22 years. She had a 401k, she had a pension, she had some stock. She assumed that she was in a really good position. Then the company sold and her pension froze. Her stock value tanked, and then suddenly her 401k was at the mercy of the market. Maybe this even sounds familiar to some of you who went through the recession previously. She came to us panicked at 48 because she thought that that was going to be enough, but it wasn't. So now she is protected with a tax-free income plan that provides her with living benefits should anything happen. So now she's able to comfortably sleep at night. Guys, don't assume that your job just has you covered. They can change the rules. Happens all the time. So make sure you have that backup and you have a plan and your strategy. If everything you have is in your 401k, it's like a ticking time bomb that's waiting to go off. At least now. So diversify across all avenues. That way you're not going backward or down when the market crashes. And mistake number 7 is not planning for healthcare costs or emergencies. Things happen all the time, and healthcare is probably going to be one of our biggest expenses in retirement. Guys, you know Medicare doesn't cover everything. A long-term illness or injury can wipe out your savings. If you're not prepared, then it can really put you in a bad position. Start planning now for disability or any long-term medical costs. Start putting money aside for that. This way, you're not left draining your savings. Mistake number 8 is thinking that you actually have more time than you do. You might feel like you've got 20 years, and I've heard it all, and I even thought this myself. I don't need to think about this right now. I'm young, I'm healthy, I feel good, I feel fine. Happens all the time. I met a young couple. Husband was in the military. They were just getting married, just starting their life. Wife was pregnant. Husband got diagnosed with cancer. Young guy, okay, in his 30s. So time flies. So it's only reasonable that you should be able to compound interest as time is going on. Waiting even 5 years could cost you hundreds of thousands of dollars. If I knew then what I know now, I would have started 10 years ago. Or there's the flip side. A lot of people in their 40s who feel like it's too late, who feel like they waited too long, who maybe had a situation and now they're like, oh, there's no way I'll ever get qualified or find something reasonable.
You can always improve your situation.
For her and others without a nest egg, experts say it's not too late to make a plan. Continue to work, lower your cost of living, save what you can, delay Social Security benefits until 70 to get the largest monthly check possible. And avoid risky investments to make up for lost time.
But it's not too late, and there's never any time like the present. So make sure you're getting out there and finding out where you currently stand right now, okay? Make sure that you're getting with a qualified expert, and you can book that with one of our advisors below. Don't get overwhelmed. Start with strategy. That's exactly why we have the guide. And mistake number 9 is for my business owners out there who are working day to day in their business. Maybe you're not even paying yourself or thinking about your retirement. I spoke with a client who had like 15 different companies. They had 15 different LLCs, trucking company, and they had different divisions within that. They created little companies within that, and they had nothing set aside for retirement. So for all of my entrepreneurs out there, make sure that you're looking into strategies like this, because time does go by fast. Mistake number 11 is forgetting about your kids and how expensive it is going to be to send those kids to college. College is expensive. Kids' schools, or maybe they're in activities now. Maybe they're in travel teams, they're joining competitions, or you just want to start preparing for their college fund, or maybe you want to put something aside to help your parents, help your elderly parents. I had a mom of 3. She came up to me and she was like, I haven't put a dime into my retirement for 5 years. I've just been trying to stay afloat, Dominique. Does that sound familiar? You need a plan that's going to allow you to handle the demands of today without sacrificing your future. So that's what we help you build. And mistake number 12 is not talking to an advisor and thinking you can do this all on your own, or that it's just not important at all. You want to DIY your surgery, right? So why would you DIY your retirement? One strategy session could help you avoid costly mistakes, could help you figure out if you're in the right plan, and it could save you thousands of dollars in taxes and fees if, God forbid, you're in the wrong plan. Not every advisor understands you. Not every advisor can work with you. Not every company can work with you. Not every company can work with women or veterans or certain illnesses or whatever may have happened in your life or challenges. Not every company can do that. So it's important that you're getting with an expert that knows the field very well, is familiar with all of the carriers, and is able to provide you with the current information that you need that's going to give you the best rates and terms for your situation. You need someone to show you how you can build real strategy to get long-term wealth towards your retirement, not just sell you a mutual fund or a policy. Look, we deserve to retire with freedom, dignity, and options, right? If you've made any of these mistakes, good. Oh well, now you know. If you want to see what your tax-free retirement looks like, then I need you to do 2 things. Make sure the first thing you're doing is downloading your free guide so you can start getting all of that information and knowledge on what it takes to start building a long-term strategy for yourself. And the second thing I need you to do is pick up that phone and speak with one of our advisors. Don't waste any more time and figure out if you're in the current plan or the best plan for you right now. That's it for today, guys. Thank you so much for watching. And if you found this video helpful, the YouTube algorithm, make sure you hit that like button and that subscribe button so I can continue to make more free courses and trainings just like this one. See you next time.